Hello, everyone! I hope you're all having a fantastic day. Unfortunately, our regular host is unable to join us today, but don't worry, because I am here to step in and ensure that we have an amazing time together. So without further ado, let's dive straight into our very first tweet of the day. Bitcoin's mining difficulty has hit yet another new all-time high this week after rising over 6% on Monday. For those who aren't familiar, mining difficulty is a measure of how hard it is for miners to find new blocks and earn Bitcoin rewards. The higher the difficulty, the more computational power and electricity is required to mine new Bitcoins. This latest difficulty adjustment comes as no surprise, since we've seen difficulty increase steadily over Bitcoin's lifetime as more miners join the network. More competition makes it harder for any individual miner to find blocks. The periodic difficulty adjustments ensure that new blocks are found roughly every 10 minutes on average. But this latest surge is still noteworthy for a few reasons. For one, it represents the largest single-day increase in mining difficulty in Bitcoin's history. Jumping over 6% is huge and reflects just how many miners have come online recently as Bitcoin's price rebounded. Secondly, it means Bitcoin mining is becoming even more exclusive, with only major mining firms able to compete at this difficulty level. Retail or hobbyist miners using just a few rigs have no chance anymore. We're long past the early days when anyone with a half-decent gaming PC could earn some satoshis. The ever-rising difficulty also has implications for Bitcoin's energy use, which is a hot topic right now. With mining becoming more difficult, miners have to use more specialized, high-powered hardware that consumes more electricity to have a chance at being profitable. Some estimates say the Bitcoin network now uses as much energy in a year as medium-sized countries. Whether or not you think Bitcoin's energy footprint is justified by its benefits, there's no denying mining is becoming an extremely competitive, electricity-hungry enterprise. So in summary, Bitcoin's mining difficulty surging to new highs reflects its growing adoption and competition among miners. But it also signals that mining is becoming more exclusive and energy-intensive as time goes on. The arms race in hashing power is relentless, and individual miners are increasingly getting squeezed out. Bitcoin mining remains a lucrative business, but only for those with deep pockets and access to cheap electricity. The tweet from @NebraskanGooner makes a great point. At what price will everyday people start flooding back into Bitcoin again? During the height of cryptomania in 2017, it seemed like everyone and their grandmother was asking about investing in Bitcoin. The huge run-up to nearly $20,000 had your distant cousins, old college friends, and colleagues at work all suddenly interested in digital gold. Of course, after the 2018 crash, those same people weren't so hot on Bitcoin anymore. 80% drawdowns tend to cool the speculative fervor. But now, in 2023, we've seen Bitcoin regain momentum and start approaching all-time highs again around $60,000. As Bitcoin climbs back towards its former glory, you can bet people are starting to pay attention again. So at what point will the FOMO truly return? Will it take a new all-time high? $75,000? $100,000? The higher the price goes, the more people will have that fear of missing out and jump in just before the peak. Some in the crypto community call these newcomers who buy at the top dumb money. They help drive the price higher temporarily, but likely end up panic selling on the way back down. Of course, nobody can predict exactly when mass adoption will return. But if 2017 taught us anything, it's that the higher Bitcoin goes, the more interested the average person becomes. Once we start getting daily, "Should I invest in Bitcoin?" questions from family again, we'll know the hype cycle is picking up steam once more. So to those of us who weathered the crypto winter, enjoy these early days before the strapping on of the moon boots happens again. It looks like Bitcoin's multi-month consolidation phase may finally be coming to an end if the technicals are any indication. As Matthew Hyland points out in his tweet, Bitcoin's weekly relative strength index, or RSI, is on the verge of breaking out of a downtrend that has persisted for over 6 months now. For those less familiar with the technical jargon, RSI is an indicator that measures the momentum and velocity of price movements. It oscillates between 0 and 100, with high numbers over 70 indicating an overbought asset and low numbers under 30 indicating an oversold asset. Bitcoin's weekly RSI has been stuck below 70 since April, which has correlated with the sideways price action between $25,000 and $31,000 during that time. This is the longest stretch Bitcoin's RSI has remained depressed since the 2018 to 2020 bear market. Now, as long as Bitcoin's price holds above $19,000 over the weekend, the weekly RSI is poised to break out above its downtrend line and push into bullish territory over 70 for the first time since the spring. RSI breakouts like this can often signal a change in momentum and mark the end of consolidation phases. If Bitcoin's price follows the RSI breakout and begins climbing back toward its all-time highs, it would confirm the end of this year-long post-halving consolidation. Of course, technical indicators aren't foolproof, but the potential RSI breakout is still noteworthy. If Bitcoin can maintain this bullish momentum over the coming weeks and months, a return to new highs looks increasingly likely. After crabbing sideways for so long, the crypto markets may once again be ready for liftoff. Bitcoin and the overall crypto market capped off a strong week with more gains on Friday. Bitcoin briefly topped $30,000 for the second time this week, hitting a high of $30,193 before settling around $29,500. This marks Bitcoin's best weekly performance since mid-June, rallying over 10% week to week. Ethereum also ended the week on a high note, gaining 4% over the last 7 days. There are a few likely catalysts driving this latest crypto surge. Firstly, optimism continues building around a potential Bitcoin spot ETF being approved in the US soon. Both analysts at JP Morgan and crypto investor Mike Novogratz predicted this week that the SEC could finally greenlight a Bitcoin ETF by the end of 2022. ETF approval would be a huge deal, allowing mainstream financial institutions and retail investors to gain exposure to Bitcoin through their normal brokerage accounts. Several ETF applicants have amended their filings to address SEC concerns, boosting hopes of an imminent approval. Secondly, Bitcoin and crypto are benefiting from a flight to safety amidst macroeconomic uncertainty. Concerns over rising interest rates and geopolitical tensions have investors turning to tried-and-true safe haven assets like gold and Bitcoin. Major investors like Larry Fink and Paul Tudor Jones voicing their support for Bitcoin as an inflation hedge also adds momentum. Beyond Bitcoin, the wider altcoin market also saw gains this week after the SEC dropped charges against 2 Ripple executives on Thursday night. This led to a surge in XRP, the token associated with Ripple, as it's seen as a sign of easing regulatory pressure. So in summary, optimism about a Bitcoin ETF and flight to safety capital flows powered Bitcoin over $30K again and capped a broadly positive week across the crypto asset class. If Bitcoin can maintain this bullish momentum, its next major test will be finally breaking its 2022 highs and continuing the journey back toward all-time highs. Bitcoin surged past the $30,000 level on Friday for the first time in over 2 months, capping a volatile week of trading. According to Reuters, Bitcoin reached as high as $30,022, its highest price since July 23rd. This over 10% weekly gain reflects improving sentiment after months of bearish pressure. There wasn't one single trigger for Bitcoin's rally, but rather a combination of factors driving momentum. Investors are eagerly awaiting a decision from the SEC on several Bitcoin spot ETF applications from major financial firms like BlackRock. Approval of a spot Bitcoin ETF would allow mainstream investors easy exposure through normal brokerage accounts, ushering in a potential wave of new capital. At the same time, macroeconomic uncertainty, including rising yields, recession fears, and geopolitical tensions, have boosted Bitcoin's appeal as a safe haven asset and inflation hedge. Major players like billionaire Paul Tudor Jones have recently reaffirmed their confidence in Bitcoin as digital gold. This institutional endorsement adds legitimacy. Of course, Bitcoin's infamous volatility was on full display this week too. Prices whipsawed after a false report that BlackRock's ETF application was approved, giving up short-lived gains. Looking ahead, Bitcoin breaching $30K for the first time in months is a positive sign. If it can maintain this momentum, The next major test will be reclaiming its 2022 highs around $48K and continuing its journey back toward $60K plus all-time highs. But with Bitcoin, nothing is ever guaranteed.